Three reasons to consider in the big picture why China announced they were no longer buying gold. There are only three that matter, and they are market reaction. All other reasons will branch off from these. One is bullish, one is bearish, and one is neutral. And everything else will be derivative of that.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. It's Friday. I'm Vince Lanci, and today is non-farm payroll day. We're going to talk about non-farm payrolls very briefly. We're going to talk about an announcement by China that they're at least pausing their gold purchases, which is why the market is lower today. And we're going to talk about a new report by Deutsche Bank. So we're going to go through these in short order, try and keep it tight today. Prices. The dollar is down 4 at 104.05. The 10-year yield is 4.30, up a pip. S&P 500 is 53.55, up 3 handles. The VIX is 12.76, up 20 basis points. Gold is 23.34, down $41. Silver is 30.39, down 90 cents. Copper is 4.55, down over 9 cents. WTI is 76.30, up 43 cents. Natural gas is 2.69, again up 5 cents. Crypto, Bitcoin 71,000 and change, up 582. Ethereum 3822, up 30 basis points. Palladium, platinum, both down. Platinum down more than palladium today. Palladium at $9.23, down $6. Platinum down $12 at $9.89. Grains all down. Wheat is the weakest, $6.40, down 9 cents. In second place on the downside is soybeans, $11.85, down 7 cents. And in third place is corn, down 2 cents at $4.43. Okay, so there's your silver chart. It's a big sell-off, undoing a big rally yesterday. We're in a volatile phase right now. I wouldn't be so worried about this. And here's the gold chart. Okay, 50-day moving average. I sent out a very special message about this yesterday. Here we are back at the 50-day moving average. And, well, you need to listen to that message. And that message basically says, you're not worried about the 50-day moving average until that slope turns down. But let's get into the fundamentals of why this market is doing what it's doing today. All right? Fundamentals are probably not the right word for it, but that's what I'm going with. All right, China hates the gold. It's a little tongue-in-cheek statement there. We're going to talk about why China stopped buying the gold. Nobody knows, but we're going to tell you what's going on, we think, hopefully. Front page, special podcast, the big boys are not selling it. That's the comment I was telling you about, this 50-day moving average. Bricks Enbridge goes live. That's yesterday. And we just threw something out for the founders this morning about China's announcement. We're going to give you the overview, the bare bones of that right now. And then I'll throw something out later on over the weekend, giving some people a framework on how to think about this. If you're stressed about it, hopefully you're not, but you never know. Okay. First, China and gold. Here we go. Here's why gold is lower today. China, here's the headline. China halts gold buying for reserves after 18-month stretch. All right. Here's the mainstream media story summarized. Gold price falls after data unveils PBOC reserves showed no change in May compared to April, ending an 18-month buying spree. First factual observation, they have been decreasing their purchases over the last several months simultaneously, while India and Turkey have been increasing. Now, if you don't think these countries talk to each other, then you're worried. Here's how we see it at the very basic, level. Three reasons to consider in the big picture why China announced they were no longer buying gold. There are only three that matter, and they are market reaction. All other reasons will branch off from these. One is bullish, one is bearish, and one is neutral. And everything else will be derivative of that. We will tell you those scenarios and what we think is most likely over the weekend. For now, so it's not such a big tease, given India and Turkey's increase in purchases and India's repatriation of gold, and given that these countries coordinate activity now, this is not the end of anything, but likely a signpost into something else. My spelling is atrocious. Obviously, I don't use AI. I will also go through the bearish scenarios. They're very real bearish scenarios there. I don't think they're accurate, but nothing is 100%, right? And then there's a neutral reason. Anyway, we'll go through that. Look, China just got caught, you know, manipulating a waterfall for tourists. You think they're just going to tell us they're going to stop when they're stopping, when they're going to sell? No, that's not how it works. We're in a geopolitical sphere right now. There's more to it than that. All right. So it may not be dip to buy yet, but certainly it's not the end of anything. Okay. And we don't need China to buy because China's partners are buying. Deutsche Bank's 3Gs of metals. Now, we're going to go through this broadly and touch on the metals that matter to us. And then in the premium section at the end, I'm going to give you a very frank comment about this report, the good, the bad, and the ugly. Anyway, so here we go, in context of what's going on in metals. Deutsche Bank's 3Gs of metals. The overarching factors for outperformance, they believe, are, sorry about that. Growth. Global industry production has recovered, impacting the macroeconomic outlook in Eurozone and China. U.S. economic growth is proving to be resilient. Next G, green energy transition. The transition to renewable energy ensures robust demand for commodities in the near and longer term. Geopolitical risks. The continuing hot water in Ukraine and an expanding conflict in Middle East are driving safe haven inflows into precious metals, causing supply concerns in industrial metals. That's their 3Gs. And they're constructive on metals going forward. We're going to discuss where this is coming from and the history of it in premium. Now, metal by metal. We'll do copper, we'll do platinum, and we'll do silver. Copper. A play on, it's a long report. Okay, I'm just giving you an excerpt. A play on green future technologies. IEA expects the power demand from data centers to surge by around 75% by 2026 in its base case scenario. Somewhere around 20 to 40 tons of copper is estimated to be required for a megawatt of data center power. We need more copper, okay? They're right. All right, next, platinum. It's good to see platinum getting some love now, and I think it's for the right reasons. Analysts are seeing a trend toward, there's a lot in there about platinum as well. Analysts are seeing a trend towards increased hybridization, which is more PGM intensive and likely to support automotive demand well into the future. Net platinum imports into China and Hong Kong reached 327 kilos. I'm not sure what that is. In January and February, their highest level at this point in the year since 2017, eclipsing near record years in 2021, 2022. I used to be very on top of platinum and palladium on the fundamental industry side. And the last I remember, these things are probably largely still true. Palladium replaced platinum when they got off of diesel catalytic converters and went towards gas catalytic converters. And now platinum's going to make a comeback in the hybrid vehicle. And we are moving towards hybrid again. It's just the bottom line. The Prius concept is the better concept. And there's some better cars out there already. So the compromise, in the end, you always compromise. And that's going to be driving the platinum palladium spread. Personal comment, I hate palladium. Now, you may love palladium, but I'll tell you why I hate it. It's crumbly. You can't really do anything with it except this catalytic converter thing, at least yet. I'm sure they'll come up with a solution to use something else later on. And it was manipulated for years. And, I was always long platinum and short palladium, and it just pissed me off. Okay, silver. The report about silver is significant in the sense that banks are talking openly about the shortfall now. They've picked up on this. Underpinning silver's fundamentals is current robust demand from industrial applications. This continued to push higher last year, reaching a new all-time record. Fueled by the remarkable rise in solar demand, silver is a key component of solar cells. Sluggish silver supply owing to a slight decline in global mine production was another factor contributing to silver supply-demand deficit last year. Analysts at the Silver Institute, an industry body, I wouldn't say they're objective, but they're an industry body, wink, remain confident that such deficit conditions will remain in place for the foreseeable future. Silver prices lagging gold. They're saying that silver's going to catch up and outperform it. And there's a lot in there on silver solar. And actually talk about silver in the context of hybrid vehicles or battery to BEV, battery electric vehicles. There's that. All right. Gold, the safe haven factor, nothing earth shattering here. They throw some numbers at you. Central bank net demand total 290 tons in Q1, the strongest start to any year on record. Reported purchases remain broadly based, with China, Turkey, and India leading the way. China, Turkey, and India. Not China, the BRICS. Okay, Turkey's going to be a BRIC as well. Remember, quick aside, Turkey's officially applying to be in the BRICS. India is repatriating its gold. China is done buying gold. Okay, we're moving on to the next phase. China's official gold holdings now stand at 2,264 tons, accounting for 4.9% of total foreign exchange reserves, the highest ever. It's way more than that, probably more than 10%. You're not even counting Mongolia. That's their gold too. So far in 2024, China has accumulated 29 tons of gold that we know of. The Reserve Bank of India grew its gold reserves by 19 tons during the first quarter, more this quarter than all of last year, exceeding last year's annual net purchase of 16 tons. Now, if I was friends with India and I was China, I would tell them I'm not buying anymore publicly, so maybe they can buy it a little cheaper. Okay. The Central Bank of Turkey continued to accumulate gold through Q1. It bought a further 30 tons, bringing its gold reserves to 570 tons. The central bank has now bought gold for 10 consecutive months. So the inflation that their people get in Turkey from his irresponsible monetary policy isn't irresponsible at all. He's taxing them and using the money to buy gold. They're separating from the West. Okay. They're going to punish their people to do it. But in the end, he's printing money and he's buying gold with it. If you're willing to accept his money, he'll give it to you. The central bank has now bought gold for 10 consecutive months, helping to lift gold reserves towards levels seen a year ago before the presidential elections. And there's a lot on it. There are charts as well. I like the silver and platinum commentary. Copper, I've heard it all before. Gold, I've heard it all before. But the silver and platinum, and there's actually iron ore in there as well, which I haven't read yet. I don't have a lot of interest in it. I just look at it as an indicator for copper. Anyway, data on deck. Today is non-farm payrolls. We talked about this in the voice note. If non-farm payrolls have come in weak, that's bullish for stocks, bonds, and gold. They all should move in unison today. Stocks, bonds, and gold should go up if the non-farm payrolls are weak, because people will spring eternal for another chance at a Fed easing soon. If non-farm payrolls are strong, all of these three markets should take a hit. Okay, so the marketplace is no longer focusing its attention on inflation. It knows that inflation for the next 3 months will go down. At least it's believing that. It's now looking at unemployment. We need a really weak unemployment number for the hope to really pop in there again, right? Especially for bonds. And if unemployment number is expected or strong, well, things should sell off and gold should be part of that. The question is, how much will gold sell off? You don't know. Nobody knows, right? Okay. It's already sold off $40. I said yesterday, and I'll say it again today, this is a normal week. Normal is a word. It's actual technical term, meaning the range is normal, highs, lows, and settling in the middle of the range. Let's hope that finishes off the week this way, but that's the way it feels. Same thing for silver.
Well, thanks for tuning into today's Markets and Metals with Vince Lanci. The show is brought to you each day by Miles Franklin Precious Metals, who we encourage you to consider for your next gold or silver purchase or sale. Miles Franklin has pricing that's among the best in the industry on most products, and Arcadia is proud to be a licensed Miles Franklin representative and happy to help whenever you have questions or want to place an order. Where this week's silver special is 1 ounce silver Britannias for only $3.15 over spot. Silver Britannia is the sovereign coin from the Royal Mint in England and has the added advantage of being IRA eligible. Place an order, get more information, or speak with me directly. Call us at 833-326-4653, and we'll be happy to help you get whatever you need. So thanks for watching, and we look forward to hearing from you. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.